Welcome. In this video, Zbcn coin is about to break its silence. But when? We will analyze it. Don't forget to subscribe and like. And please watch until the end to understand.
The existence of such a descending trend structure indicates a highly critical process in terms of technical analysis. This descending trend line, which the price has been following for a long time and has failed to stay above with every attempt, is in fact one of the clearest structures reflecting investor psychology and the overall market sentiment. When there is a descending trend in a financial instrument, this line shows, with every touch, the strength of the sellers and that buyers need to exert more effort. In other words, every time the price rises toward this trend line, it signals that sellers re-enter the market and apply strong pressure. However, the most important point here is a lasting break of this trend line. For the price to first surpass this trend line would be the clearest evidence that the market dynamics are starting to shift. When this breakout happens, it's not just a technical barrier being crossed. Investor psychology also changes significantly. Buyers who previously assumed they would encounter sellers at every rise gain confidence with the breakout, and the market suddenly begins to turn in favor of the buyers. A price breaking a descending trend is not just a momentary move, it's actually the breaking of a chain extending from the past and the start of a new chain. Trend lines can be thought of as part of the market's collective memory. Market participants look at these lines, make decisions, and guide their emotions accordingly. If the price is repeatedly turned down from this descending trend line, it would not be wrong to say that sellers have won every battle. But a day comes when buyers begin to challenge this trend line, and if a breakout finally happens with strong volume support, the sellers who had always won until that moment are now forced to retreat. This retreat shifts the market balance in favor of the buyers and can open the doors to a new upward trend. To better understand the importance of breaking a descending trend, one must look at its psychological aspect. Investors who have long seen the price move under this trend inevitably adopt a pessimistic stance. For them, the descending trend is almost like the fate of the price. As long as this perception remains unbroken, most investors act cautiously, hesitate to buy, and even show a tendency to sell at the slightest rise. But once the price breaks the descending trend and starts to hold above it, this psychology reverses. The investors who are constantly selling are now replaced by buyers who do not want to miss the upward move. This creates a sudden shift in the market's direction. In other words, breaking a descending trend is not only the passing of a technical level, but also a change in the market's state of mind. For this breakout to be valid, a single wick spiking upward is not enough. What really matters is the permanence of the breakout. Many times in the markets there have been short-term moves above a descending trend line only for the price to fall back below it. Therefore, to talk about a solid breakout, the price should close above the descending trend line several times, preferably with volume increasing during this process. An increase in volume is one of the key indicators proving that the breakout is not fake and that there is strong buyer support behind it. If the price breaks the trend line along with rising volume and then turns that level into support staying above it, then it can truly be said that this breakout marks the beginning of a genuine reversal. Saying that the price must first break this descending trend is essentially stating one of the basic conditions for the start of a new upward trend. No upward move can gain real momentum until this barrier is overcome. The descending trend line is like an invisible wall in front of the price. Without breaking down this wall, the path forward is blocked, and buyers cannot gain the strength they need. Therefore, if the price wants to rise, it must first remove this obstacle. When this obstacle is cleared, the market can start to move upward with a kind of energy as if freed from its chains. When a descending trend is broken, new targets start being discussed in technical analysis. This breakout not only indicates that the previous downtrend has ended, but also shows that the potential for new upward moves has strengthened. Investors then focus initially on shorter-term resistance zones, but over time, broader upward expectations also develop. Especially if after the trend breakout, the price gains buyer support from previous low levels, this rise can become much stronger. Thus, the market escapes the pressure of the descending trend and opens a new chapter. Another point that should not be forgotten is the sense of confidence created in the market with the breaking of a descending trend. This confidence attracts not only current investors, but also new investors waiting on the sidelines. Many investors see trend breakouts as opportunities and enter the market to take advantage of them. This helps the price gain stronger momentum after the breakout. In other words, the breaking of a descending trend is not just a technical event, but also a development that brings with it a new wave of investors. In summary, a descending trend line is one of the biggest obstacles in front of the price. Overcoming this obstacle means that market balances are shifting, psychology is transforming, and new opportunities are arising. Emphasizing that the price must first break this descending trend is essentially pointing to the first step necessary for the market to enter a new phase. Once the step is taken and the price holds above the trend line, an entirely new path opens for investors. This path can be filled with upward moves, new targets, and strong buyers. But the prerequisite for all of this is the breaking of the descending trend. Because without this breakout, no upward move can be lasting, and the pressure on the market continues. That's why saying the price must first break this descending trend is one of the most fundamental and critical conditions in technical analysis. But we can't make decisions based only on trends, so let's take a look at other metrics as well. Stay tuned.
When we examine price movements, we often witness just how critical Fibonacci retracement levels drawn from the bottom to the top can be for investors. These levels are not just simple mathematical ratios, they also reflect the market's collective psychology and the buying and selling decisions of investors. In particular, in a Fibonacci measurement drawn from the bottom to the top, the 0.618 level is one of the areas where the market most often reacts strongly and where the trend tends to regain strength. The fact that the price is currently approaching this area should be seen as quite remarkable, as the likelihood of buyers stepping back in at this point is very high. Investors seeing this level as a kind of turning point also boosts confidence in the market and strengthens the probability of prices developing an upward reaction from here. At its core, Fibonacci is built on the mathematics of nature, and seeing that this mathematics also applies to markets is why many analysts take these levels into account. The 0.618 ratio, known as the golden ratio, is a universal measure that appears in nature, art, the human body, and even in the spiral structures of galaxies. Therefore, when prices reach this level, it creates a sense of confidence in investors' subconscious. The collective consciousness accepts this ratio as a natural area for a reversal. This belief is reflected in prices, and most major buying waves often start at the 0.618 level. The price now approaching this critical threshold may actually be sparking the first hints of a new bullish scenario. What matters here is not only the presence of the technical level itself, but also how the market has reacted to these levels in the past and the direction of the current momentum. A price approaching 0.618 has often previously gained strong upward momentum, and during a retracement, touches this area to gather strength. This accumulation process, combined with new buyers entering the market and existing investors' desire to hold their positions, can create the possibility for prices to move back toward previous highs. A price that reverses upward from here should not be overlooked, as it could signal not just a short-term reversal, but also a medium to long-term trend shift. Touching or approaching the 0.618 level also shows how healthy a retracement is. These levels usually represent the natural pullbacks needed for an uptrend to continue. If the price bounces off 0.618 without dropping to much lower levels, such as 0.786 or even deeper regions, this is actually a sign that the trend remains strong. In other words, the price action confirms that the broader uptrend is still valid. From this perspective, the current price structure approaching 0.618 can be interpreted as a positive signal that the trend may continue healthily. In addition, a reversal from this level brings up the concept of the golden ratio reversal, often discussed in technical analysis. Investors perceive a price turning upward at this point as a vote of confidence, which can attract even more buyers. This not only turns prices upward, but can also cause them to accelerate rapidly.
The narrowing of the Bollinger Bands is one of the most important signals in technical analysis, indicating that the price may soon make a strong breakout, and it is often eagerly watched by investors. This is because the Bollinger Bands show the distribution of price movements relative to standard deviation, and the narrowing of the bands actually signals that market volatility has decreased significantly. This period of contraction is usually seen as a time when the price has calmed down, almost like the calm before a storm. However, what has been proven repeatedly in technical analysis is this: when the price stays in a narrow range for a long time, energy builds up among market participants, and at some point, this energy is released sharply. This is called a breakout, and regardless of which direction the price moves, once the breakout occurs, the likelihood of a large move is quite high. The most striking aspect of a Bollinger Band squeeze is that it shows the market is tightening, and a balance has formed between buyers and sellers. When the price moves near the middle of the bands, it can be said that the market is indecisive, but as the bands tighten, it signals that this indecision will not last much longer. Because markets do not remain stagnant indefinitely. Especially in highly volatile areas like the cryptocurrency market, such squeezes can turn into much stronger breakouts. In other words, the price acts like a tightened spring, and as the bands narrow, the spring gets even tighter. Eventually, when the spring is released, the price makes a sharp move in one direction. This move can be upward or downward, but generally the moves that follow a squeeze are very strong and fast. During a squeeze, the upper and lower lines of the Bollinger Bands come closer together.
This indicates that the price is now compressed in a very narrow area. What investors should pay attention to at this point are increases in volume. Because when the bands tighten, volume is usually low, but when the price breaks one of the bands, a strong move typically starts along with increased volume. If the price breaks the upper band strongly, it may indicate that an uptrend has begun and increase the likelihood of a new rally. A breakout supported by volume is not a fake move, but a signal of a lasting trend. Likewise, if the price breaks the lower band, sharp downward moves may occur. In other words, a Bollinger Band squeeze does not indicate where the market will go, but it does clearly show that when it will move strongly. This is why many investors closely monitor these squeezes. Bollinger Band squeezes also reflect market psychology. Investors do not want to trade much in an environment of uncertainty, so trading volumes decrease. As the price becomes more compressed in a narrowing range, it shows that the market is holding its breath. But no market can stay like this for long. At some point, a breakout must occur. This is why Bollinger Band squeezes are one of the most important signals for traders. Because during this period of price compression, investors who are patient and take a position in the right direction when the breakout occurs can achieve very high profits. To understand this structure, it is also necessary to touch on the mathematics of the Bollinger Bands. The bands are created by adding a certain number of standard deviation multiples to a moving average. When price volatility decreases, the standard deviation decreases and the bands come closer together. This squeeze is usually seen at the end of a trend or during periods of market indecision. But this situation cannot last forever, because price is always searching for new equilibrium areas, and this search results in a breakout. For this reason, periods of contraction are considered precursors to strong future moves. When investors see a Bollinger Band squeeze, what they need to do is be patient and wait for a possible breakout. Taking an early position is risky because the price may make a few fake moves within the band before breaking out. Therefore, confirmation is usually awaited. Taking a long position when the price breaks the upper band with strong volume, and taking a short position when it breaks the lower band with strong volume is considered safer. However, a common situation in the cryptocurrency market is that after a squeeze, there is first a fake breakout in one direction, followed immediately by a real breakout in the opposite direction. For this reason, a Bollinger Band squeeze should not be interpreted on its own, but together with other indicators. This squeeze structure also shows the position-building process of large players in the market. Because when the price stays in a narrow band for a long time, it may actually be a period when big investors are accumulating positions. Especially in markets like cryptocurrencies, which are prone to manipulation, large investors can adjust their positions during periods of tight ranges and then move the price sharply in the direction they want. This is why it is very important to monitor the market, watch volume movements, and get confirmation from other technical indicators during squeezes. On the short term, but also long-term trends. If the bands show a squeeze after a long period of sideways movement, this is often a sign of a new trend. For example, a squeeze seen on a monthly chart may signal the beginning of a strong trend that could last for years. For this reason, it is very important for investors to pay attention to which time frame they are trading in. Squeezes seen on daily and hourly charts create short-term moves, while those seen on weekly and monthly charts can precede much larger rallies. In conclusion, a Bollinger Band squeeze is an extremely valuable technical analysis signal that shows the price may soon make a breakout. This contraction indicates that the period of market silence and stagnation is about to end, and that a strong move is imminent. While it is not clear whether the direction will be up or down, whichever band the price breaks with strong volume, there is a high probability of a large move in that direction. This is why it can be highly profitable for investors to carefully watch Bollinger Band squeezes, remain patient, and take the correct position when the breakout occurs. Especially in the cryptocurrency market, these squeezes are among the strongest technical signals that offer investors great opportunities, and when used correctly, can open the door to very high profits.
Yes, friends, I hope you liked the video. If you subscribe to my channel and liked the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps.
I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.